This is TradingETFs.com with a market recap for today, January 5th, 2016. Today I'm going to focus on two ETFs, the Diamond ETF, the DIA, and also the VXX. I had been talking about the Diamond over the last couple days here, and I had mentioned we went sideways on the right above the zero line. We got the big down move yesterday, and I had said that after a big down move, most likely the oscillator would continue to the downside, and we definitely saw that today. Even though price went up just a few cents, it closed at 171.39, and yet our oscillator still broke down below the zero line. So my expectation here is that we are probably going to see some type of a bounce. They're going to try to bounce the ETF up. And try to get that oscillator back above the zero line. I'm going to show you the short-term oscillator here, and what you'll notice is that we came down into the area where we bounced previously. I'd mentioned before, November 13th we bounced, and then through this whole time frame here we'd bounced from this level before. So now the short-term oscillator's bouncing up a little bit. Price just pretty much went sideways, up maybe 10 cents. And so my expectation is that we're probably going to try to rally over the next day or two, maybe the next 3 days, try to move price back up. You can see here we came down almost to the same level we were at the 171 price, and we're trying to bounce just a little bit. I don't think it's really going to hold, but I do want to see the oscillator maybe bounce another couple days here. That'll give us plenty of room to have the oscillator turn right back down, and that's when we're really going to see what the move, what this downside move is all about. So once again, the oscillator, the long-term oscillators move down, and I would expect that we're going to continue to move down over a period of time. But in the next 1 to 3 days, I would expect we're going to try to go sideways, maybe even try to come back up and test that zero line. What I wanted to do was extend this out a little bit farther and take a look what the oscillator would have looked like, or what the oscillator did look like before we got the big market collapse last year. You can see here that right after, it's right around mid-June of 2015, the oscillator broke down below the zero line, went sideways a little bit, tried to bounce up above the zero line and failed. We moved down. It tried to hold again, tried to go back up and retest the zero line and failed, went down even farther, turned again, tried to go back up and test that zero line once again, failed again, and then we had the big collapse in price. But the one thing that I don't want you to notice is that if you were following our oscillator last year, you would have been out of the market right in this mid-June time frame, early June time frame, which prices were roughly in the 178 price range, and you would have been out of the market, and you would have not got back into the market because we never did go back above the zero line. So this whole time frame here, in terms of this price movement, you would have been out of the market. You would have been out of the market in the big collapse to the downside, and you would have remained out of the market on a conservative portfolio up until about the mid-October time frame. Then you could have ventured back into the market. I say conservative because back down in these levels here, we would have been oversold. You could have taken a position and been able to be back into the market and ride it back up. But again, what I wanted to do here is just show you a comparison that once we broke down below the zero line, we went sideways, tried to test it a couple times, in fact 3 times, and we failed, and then we got the big collapse. So what I'm looking for here is we now have broken through the zero line, broken down below the zero line. We may, over the next couple days, try and hang around this zero line area, maybe even try to test and get it back up above it. But if we don't, and we turn and accelerate to the downside, then I think in terms of price, we're going to see these September lows come back into play, probably in the 163, 162 area. If not farther down to this 156 area. So I'm not yet giving a sell signal, but I'm definitely on a sell signal watch, and I would probably know in the next couple days whether or not we're going to take a position to buy the VXX, which is this next chart. And give me just a second here. Let me switch over to our other chart. I talked about the VXX a couple days ago as well, and you can see here we have the higher highs, and I talked about I wanted to see a big gap to the upside in the dot, and we got that yesterday. Today you can see we still moved up a little bit in the LT oscillator, although price went down. The long-term oscillator is still moving up. I'm going to switch this to a 90-day chart so we can see more clearly what's going on here. And so you can see that we still went up a little bit today, even though the price went down. And that's what I want to see, because what it's going to do is it's going to set up the short-term oscillator to finally give us a buy signal. And I'm switching over to the short-term oscillator right now. You can see we had a big gap up in dots. Price has gone down today, so we get the dot to come down. Short-term oscillator is now coming back down to this zero line. As I mentioned, that's what I want to see, because I want to be able to take a position when the oscillator is not in overbought territory. I'd like to see it back in the zero line, maybe just a little bit under it, before we can go ahead and take a position in the VXX to take advantage of more price decline that it looks like it's coming. So for right now, that's about all I wanted to update you on, and we'll know more over the next couple days here. Thanks very much. Have a good night.